that right? Apple's number one. You've got Meta. I mean, you've got Nvidia's a big position. So, are you adding to these now or nervous still about their performance so far since Jan 1?
Yeah, they continue to be, core holdings in the portfolio. I think looking forward, they still are well positioned, I think, in tech to drive good returns. I think that, things are similar on my mind as the rest of the market, just in terms of where the economy is going. I think here, it's all about earnings and, where do the tariffs kind of put us. So
on the question of Nvidia specifically, what do you think about the CEO showing up in China and this argument that they should be able to continue to do business there because Huawei already has superior technology and it would hurt, one of our most important companies not to be able to have access to that market for some of its chips?
Yeah, I think that, China continues to be a good key market for Nvidia. I think that part of why Nvidia has been so successful as well as other U.S. tech companies is that they have the R&D to invest and stay ahead. And so I think part of that comes from revenue. And if you look at the current chips that China has access to, they are significantly, at a performance level that is behind what the rest of the world has. So I think that, Nvidia will continue to probably comply with whatever the U.S. regulations are while, serving its customers.
And for AI purposes, is it full steam ahead then? I mean, should the U.S. companies be looking over their shoulder at what the Chinese might be able to develop? And that includes Apple and some of the setbacks that it's had on the AI front, trying to sort that market out.
Yeah, well, I think that, various companies are still figuring out the use cases of AI. I think that at the same time, everyone's trying to build up their AI capabilities, and in frontier models include that. And so to me, I think it's a key priority. Apple has a lot of really good competitive advantages. I think they're really focused now on delivering a really good Siri and apply AI into their ecosystem. So I expect that they continue to look to drive both form factor upgrades coming up the new phone, as well as likely better enhancements on AI. So I think those are the two things that they're really focused on.
How is it going to affect their results, all of this reported front-loading of product that took place as they were trying to figure out what was about to happen with those China tariffs before the exemption? Well, I think that, they are, shipping probably normally to their customers. And there probably was a little bit of, if there's uncertainty of supply that, in general, the way that semis work is that there's pull forward. And so that's probably not surprising. And, I think from here, it's more about what is the next chip that is available to the China market? How is it developed, and the ongoing kind of regulations that may impact it.
Amid persistent U.S. restrictions on AI chip shipments to China, Nvidia CEO Jensen Huang arrived in Beijing this week for a series of meetings with Chinese officials and tech leaders. The semiconductor giant may lose up to $5.5 billion in potential income as a result of new U.S. export regulations that need permits for the selling of its H20 chips to China, which coincide with Huang's visit. For Chinese customers waiting for supplies of Nvidia's cutting-edge processors, the regulations have caused confusion. The China Council for the Promotion of International Trade, a corporate group with ties to the state, requested the trip. Huang spoke with Vice Premier He Lifeng and other government officials while he was there, along with executives from businesses like DeepSeek, a local generative AI startup. Discussions centered on creating new chips that satisfy existing U.S. rules while catering to China's expanding AI industry, according to people familiar with the itinerary who were quoted by the Financial Times. Despite growing trade tensions, Huang expressed hope about future cooperation and called China a very important market. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Nvidia as a whole, it has certainly faced some pressure. I mean, that was part of what caused the market to take a leg down yesterday. Doing that announcing that they'll have to do that more than $5 billion write-down. A lot of the tariff exposure has been impacting Nvidia, and it's really had a difficult year this year.
Yeah.
But you see, the way you see it is a hold. Tell us about this.
Yeah.
Why?
I think it's a hold because it's still value price. So right now, if it drops even just $1, if like it's trading around 101, if it was 100, we'd be buying it. So literally, if it gets to 150, we're going to sell that because we think that would be a long time before it would recover from that price. But it is a hold because basically, I don't feel sorry for any company when they're doing business, but I do feel that they had structured their H2O chips to be sold with the actual, controls that were in place before.
They did.
And then obviously now with the tariffs, it's getting impacted. So that was that 5.5. And that just goes to show you the impact that Nvidia has on the broader tech market and NASDAQ in general that we saw yesterday. And so I think people just need to understand that, again, volatility, and unless and until we get resolution with China directly, Nvidia is going to be, we don't know exactly how it's going to be impacted.
Okay. So certainly, possibly wait this one out, along with the wait and see theme.
I just think that the investors would be best served to expect that until we get stability in tariff policy, there will be volatility, and likely it will be a retraction of global equity prices to the downside. Not only because of slowing demand because of tariff policy, but also because we've got global liquidity issues. Diane, with everything that's been going on, there's a lot of global liquidity issues, which is why you're seeing bond yields go up and you're starting to see the repo market be affected. And that's really why Trump is really calling on Powell to cut rates now, and he's going to the Supreme Court and saying, do I have to not be able to fire him?
Because they are at the forefront of artificial intelligence, AI, IT behemoths Alphabet and Nvidia are attractive investments in AI. Each provides a unique facet of the AI ecosystem for investment. In order for AI to function on cloud computing infrastructure, like Alphabet's Google Cloud platform, Nvidia is a pioneer in semiconductor hardware. Customers can profit from AI through Alphabet's software products. For instance, a lot of search inquiries are answered by AI in its Google search engine. Is one a better AI investment than the other, considering that Alphabet and Nvidia work in separate facets of the AI industry? Investigating each IT giant in greater detail is necessary to arrive at a solution. Alphabet is making significant investments in AI, just like many of its major competitors. Last year, it invested $52.5 billion in capital expenditures, CapEx, and by 2025, it plans to increase that amount to $75 billion. These expenses are essential. People are beginning to switch from search engines like Google to AI products, therefore Alphabet's AI needs to win over customers. According to research firm Gartner, as more people use AI apps like OpenAI's ChatGPT, search engine utilization will plummet by a staggering 25% by 2026. Of Alphabet's $350 billion in 2025 revenue, a staggering $198.1 billion came from Google. Therefore, in order to prevent a decline in Google revenue, Alphabet requires AI users to adopt its AI solutions. Alphabet's AI products are doing well thus far. The platform has seen an 8-fold rise in usage over the past 18 months, with Google Cloud clients adopting it to create artificial intelligence for their businesses. Consequently, the revenue of Google Cloud grew from $33.1 billion in 2023 to $43.2 billion in 2024. Additionally, Alphabet is developing quantum computers, a technology that could greatly enhance AI. The company revealed Willow, a quantum chip that can perform calculations that would take centuries for modern supercomputers to finish, in December. Although Willow is still at the experimental stage, this might be a game changer if Alphabet can someday make the chip widely available. It seems sense that Nvidia's extraordinary success during the AI boom made headlines. The company saw a staggering 114% increase in sales to $130.5 billion in its fiscal year 2025, which concluded on January 26th. Tech firms like Alphabet's acquisition of Nvidia goods to develop AI capabilities in their cloud data centers was the driving force behind that success. With Alphabet and other companies increasing their capital expenditures, Nvidia is expected to see substantial rise in sales in 2025. Indeed, Nvidia anticipates first-quarter sales of $43 billion for its fiscal year 2026, up from $26 billion the year before. However, how long will the company's sales continue to rise? Years may pass as the AI sector develops. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
It's been an incredible time. It's different than all the other times. You tell me how you're feeling today and maybe some of the ups and downs you've experienced, where you stand now.
Okay, you know what? I'm trying to be positive, and it's really kind of hard. So we know that the roller coaster we went through last week, right, with that day of the fake news, you know, with Bill Ackman saying, look, the question that everybody was asking was, and even Mr. Cramer has it, what is it going to take for people to buy stocks again with all the uncertainty going on? And then Bill Ackman came out with a great statement. He said, pushing this down the road for 90 days, get a 90-day pause, and let's see where everybody stands so we can get some level of certainty. Well, that's sort of, you know, catalyzed that crazy day of Mr. Trump actually doing it, and then the bond market, which was a bit controversial with China and all that. So we've had these up days, these down days, and you know, and then you've got this week, right? It felt like we were going to level off and maybe start inching our way higher. And then yesterday, with the Nvidia thing, or the day before yesterday, with the White House basically cutting Nvidia off at the knees, right, by severing their relationship with their largest customer, which is going to impact Nvidia into the level of $5.5 billion. What I think is the most disconcerting thing is that the pervasive uncertainty is causing companies to not be able to lay out guidance, which the last time you and I saw this was during COVID, December 2021, during COVID, when Jamie Dimon said for the first time, I don't know enough to be able to give you guidance that makes any sense. And so when you've got that inability to be able to look forward, we know about earnings and all that. Looking backwards, not that big a deal. Right. But looking forward without any clarity, it's literally like driving in fog. And that's where we're at. We don't know more about the numbers on tariffs. We're picking a fight with our largest trading partner or foe, China. We still have lack of clarity around anything. We're causing a major breakdown in tech, because where Nvidia goes is where the market goes. And so we're sitting here today. Obviously, earnings on UNH knocked the heck out of the Dow. The S&P, it's a shortened holiday week. You know, we were up a little bit, we were down a little bit, a lot of flow on the opening on the downside. And so, you know, I don't know. I don't know, and that's a legitimate answer.
That is a legitimate answer, and you've been on this floor forever, as you know, for as long as I've been here, and that's decades. Let's talk about what you've been doing. How do you handle it? Have you been buying dips, selling rips? I mean, what do you do during the time?
Okay, so for me, you know, I'm a day trader, right? So I day trade the S&P. So for us, it's been a cooperative market because the market's either been going up, or down. And so that day trade has been pretty cooperative. But I will say, you know, I have this academy called Wall Street Global Trading Academy, which has got thousands of young retail traders, you know, and I see a lot of fear in their eyes when it comes to what their 401ks look like from February 19th to today. But from a trading perspective, this is look, volatility is wonderful for day traders. You know, what am I doing? It's really hard to know what to do, because you can be in a trade for the right reasons, and a tweet comes out or news gets disseminated in a surprise fashion, and this market goes up 70 handles or down 70 handles, and you can get blown up.
That's the market, right?
That's where we are. That's what we need to be used to. But
that's the market, the black swan events. You know, you have fundamentals, you have technicals, and then you always have the wild card. Yep. I mean, it's a market, right? And sort of that's where we've navigated. During COVID, we didn't have clarity. The argument would be, and I don't know whether it's true, but maybe we'll get, you know, the whammies of we made a deal here, we made a deal there, we made a deal here. Maybe we'll get some clarity. Maybe it could come sooner than later. But we don't know, right?
We don't know.
And are you feeling like China's winning this, or what? Where do we stand on that?
You know what? No, and I would never want to even have to say that. What my hope is that we start checking off the box with individual countries and make deals there, and maybe that will isolate China enough to have to force a deal. You know, I mean, at the end of the day, a deal has to be made, right? Mr. Trump is a smart guy.
Don't you think it will?
I believe it will. Yes, I do. I believe it will. And it will be, they will pull it out of a hat. It'll be Sunday afternoon, right when the futures open, and we're going to go, you know what, we've negotiated a deal. It's going to be the greatest deal ever.
Does it? Your best deal ever. Will it shoot up to the sky, or something good happens that next trading day?
I really believe so, because think about it, what we saw when we put on a pause. last week, when Mr. Trump announced the pause, this market went up 550 handles on the S&P. That's major. People are waiting in the wings for a reason to buy the market. And if we get a deal, people will buy the market and we'll be out of the woods.
Businesses have been concentrating on developing and training robust AI software in the past few years. The next stage of AI is accelerating now that these systems are operational. The next era is known as the age of AI reasoning. It focuses on improving AI models after training so they can digest information and data and more closely resemble human thought processes, such as making inferences from the data. To provide this capabilities, businesses will require greater processing power, which Nvidia is supplying with its new Blackwell Ultra platform, which was unveiled in March. Blackwell Ultra, which is anticipated to launch in the second part of this year, is already being used by prominent internet companies like Alphabet. Nvidia is also anticipating quantum computing, much like Alphabet. To aid in the development of a widely used quantum machine, it established a research center for quantum computing. With a 14% growth in revenue from 2024 to $350 billion, Alphabet generated $100.1 billion in net income and $24.8 billion in free cash flow, FCF. Nvidia's fiscal 2025 sales of $130.5 billion, up 114% year over year, generated $72.9 billion in net income and $60.7 billion in free cash flow. Using the price-to-earnings (PE) ratio to evaluate stocks is one way to aid in the decision-making process. Investors' willingness to pay for a dollar's worth of earnings is indicated by this widely used statistic. Since its share price dropped despite recent stock market turbulence, Nvidia's stock is now more fairly valued. Its PE multiple of 37.8 as of this writing, however, is still larger than Alphabet's 19.5, indicating that Alphabet is a better value. Nevertheless, given the company's higher free cash flow and the danger to Alphabet's Google search business from growing consumer AI use, Nvidia's stock may be worth more. In fact, before choosing to invest in Alphabet, it could be prudent to see how Google's revenue evolves throughout the course of 2025. As the AI sector develops, Nvidia's leadership in AI semiconductor components and promising development prospects make it a desirable investment. And now seems to be a favorable moment to buy shares because of the improved valuation. Nvidia is currently the best AI stock to buy because of these considerations. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
But let's talk about your overall perspective on the market and how you characterize it recently. A lot of people say this is an opportunity, buy the dip, buy the dip, buy the dip. You don't think that. What do you say?
No, I think this is a sell the rip market. I don't think anyone should be really debating whether we're in a bear market or bull market. I mean, you look at the losses on the tech side, which is heavily weighted to the indexes. The trend is extremely bearish and uncertainty is at levels we haven't seen since COVID. So trying to pick a bottom here and saying buy dips, in my opinion, is extremely dangerous at this juncture if you're fully invested. We are not fully invested. So if you're positioned with a lot of cash and gold like we are, then you can try to be cute and trade this short term. But I think when we look over the next few months, we are going to see that the economy is slowing down much faster than the market has priced in. And that's not priced in fully to this market. So we expect us to touch at least the lows and probably break in new lows here in the coming months. We think this quarter is going to be the worst because of earnings, because of the data that's going to come in, and because the Fed is not going to save us this time. So we're going to be looking to be aggressive buyers, but it's probably going to be late second quarter, early third quarter based on how we see the math lining up.
So let me ask you, in terms of the indicators that you're looking for, what indicators are you watching to see a C shift then when it becomes not a sell the rip kind of market from your perspective?
Well, one of the main things, frankly, from a business sentiment standpoint is to get clarity on what trade deals are going to look like. That's going to have a big impact on what forward earnings and forward growth is going to look like. And until we have certainty there, it's nothing more than a guess. So we need to see clarity in regards to trade. and we have to stop making lower lows on the market and these names. You look at names like Nvidia that are highly owned, right? Once they bounce and they hit certain levels, they sell off aggressively and make lower lows. And until we see that trend stop, in conjunction with the VIX, we need the VIX in the low 20s. We're having a hard time breaking 30, and it's been ranging between 30 and 60 here. That is not an environment that screams buy the dip. We need that VIX to really come down and get volatility under control.
Okay. I want to get your thoughts on gold because I know you have some thoughts there. It's a little bit lower today, but it has been in a bull market. What's your expectation in terms of the patterns for gold throughout this year?
I think gold is one of the things that has flown under the radar somehow. Even though it beat the S&P last year, it's up another 20+% for our clients so far on a year-to-date basis. And so because of that, and because it's under-owned, I think you're going to see money flowing from bonds, which have been in a bear market, looking for defense, which is going to be gold. And then I think as uncertainty continues to rise with the economy, if we are right on growth slowing at a faster pace, I think that's going to add even more money flows going to gold. So I think gold's going to continue to get new highs. And on days like today, where you're getting a 1 to 1.5% pullback, depending upon what time of day it is, if someone doesn't have gold, that is an area that I would be buying dips in. We have a 10 to 15% position right now in gold for clients based on their allocation, and it has been a home run this year so far.
Okay, so there is where you would say buy the dip. I would argue that gold was essentially neck and neck with the S&P 500 last year. It was very close, but both bull cases last year, certainly a very different case this year. Your expectation for earnings this quarter, are you expecting it to act as what are you looking for from this quarter? Are you worried about guidance this quarter? Do you think clarity is going to be missing this quarter because of the tariffs?
I do. And I think if you think about it, right, I think companies have a lot of incentive to throw the kitchen sink on earnings and give the worst case scenario because I think people are expecting it. Their stocks have already been clobbered in many of these names. And so they're in their best interest to just get it all behind them in this quarter. And then the comps moving forward will be easier to beat. So we expect earnings to be really challenged when we look at forward guidance. And you look at companies like Walmart, I believe they just last week or this week just pulled forward guidance. And that just kind of goes to show with the uncertainty. And you look at a company like Walmart, I mean, if there's any company that has a pulse on middle America, it is Walmart. And so that spoke volumes to us. And, tech earnings start at the beginning of May. So if we get a rally this next week because there's a trade deal done with Japan and Europe, I would look at that for fully invested investors to maybe take some off the top because once we get to May with these tech earnings really start to go into full gear, that could be a potential for the next leg down.
So if your view is that the economy is going to deteriorate a little bit from here, or you're worried about some of it right now, we have seen some mixed economic indicators. What sectors do you believe their valuations are misaligned with where they should be?
So I think tech, and why I say tech is because of the way the market structure is right now. It is so highly concentrated. We have a handful of names that have really moved this market. And so I think there's still more downside there. And the reason why is when you get growth scares, I don't think we're going into a recession. I think we're going to have a major growth scare because of what's happening right now under the hood. What happens is your growth companies are the ones that get sold. And because of how highly concentrated a handful of the names are, the Mag 7, our concern is those are going to get aggressively sold off, and that takes the broad market down with it. And so that is an area that also will give us the best opportunities because the positive is once we get through this quarter, I think we're going to have some opportunities that we haven't seen since COVID. And if you play it right, you could have really nice upside for the next several years in portfolio.